A few weeks ago, something strange happened in the global silver market. Prices suddenly moved in a way that confused traders, analysts, and even some banks. Large volumes of silver contracts appeared in the market almost at once. This sudden wave pushed prices downward and triggered speculation, but behind that sudden movement, some experts believe a deeper story may exist. They think geopolitics and trade tensions could be influencing the market. The real question many analysts are asking is simple. Did China just send a shock through the silver market? And if that is true, why is almost nobody explaining what is really happening? The silence itself has made the situation more mysterious. Imagine waking up to news that one of the world's most important industrial metals is suddenly under pressure, and the cause might be geopolitical decisions happening thousands of miles away. Silver may look like a simple commodity, but it quietly sits inside some of the most important technologies on Earth. Solar panels depend on it to conduct electricity. Electric vehicles also require silver in their electronic systems. Smartphones, satellites, and medical devices all rely on silver. Its electrical conductivity makes it extremely valuable in advanced technology. So when something disrupts the silver market, the ripple effects can travel quickly. Global supply chains can feel the impact faster than most people expect. Before we go deeper into the story, take a quick moment to like the video, and consider subscribing if you enjoy calm and clear financial explanations. Your support helps the channel grow. It allows Iron Ledger to keep exploring the hidden mechanics of global markets. Now let's talk about China's role in the global silver ecosystem. China is one of the largest industrial consumers of silver in the world. The country manufactures enormous quantities of electronics and technology products. Solar panels, batteries, and advanced devices all come from massive Chinese factories. Many of those industries require steady supplies of silver. Without that metal, production lines could slow down quickly. Because of this dependence, any change in Chinese policy can influence the silver market. Trade decisions or industrial shifts can move prices almost immediately. Over the past decade, China has invested heavily in renewable energy. The country now leads the world in solar panel manufacturing. Every solar panel requires a small amount of silver. That silver helps conduct electricity produced from sunlight. On its own, the amount per panel seems small, but millions of panels produced every year create enormous demand. When factories operate at that scale, total silver consumption becomes massive. This demand quietly absorbs large portions of global supply. Now imagine what happens if China changes how it secures silver. Even a small policy adjustment could influence global markets. Some analysts believe that a shift in trade flows recently triggered the market movement. Large Chinese buyers may have begun securing supply differently. Instead of relying on open global markets, they might be locking long-term contracts privately. This reduces the amount of silver flowing through public exchanges. When less metal passes through exchanges, price discovery becomes less transparent. Market signals can begin to look distorted. Another factor involves growing geopolitical tension. Economic competition between global powers has intensified in recent years. Trade restrictions and technology controls have become strategic tools. Governments increasingly treat critical materials as national assets. Metals that once seemed ordinary now carry strategic value. Silver sits right in the middle of that shift. The United States relies heavily on advanced electronics and renewable energy. Both sectors require large amounts of silver. If supply chains tighten, industries can feel pressure quickly. Manufacturing costs could increase as competition for metal grows. Some analysts believe China has strength and control over parts of the metal supply chain. This includes refining and industrial processing capacity. Even if raw silver is mined in other countries, processing may happen elsewhere. Often that processing connects to Chinese industrial networks. Control over processing can be just as important as control over mining. Whoever controls refining can influence how metal reaches global markets. Now let's return to the recent price movement. When silver prices dropped after large contract volumes appeared, traders were surprised. Many initially believed it was normal market volatility. Commodity prices often move quickly in the short term, but some observers noticed unusual timing. Contract activity seemed to align with broader shifts in global trade patterns. This raised new questions for analysts. Were large industrial players repositioning themselves quietly? In commodity markets, repositioning often happens silently. Large buyers simply change how they acquire materials. Instead of announcing decisions publicly, they adjust purchasing strategies. Over time, those adjustments influence price behavior. Another part of the story involves industrial bottlenecks. Even when enough silver exists globally, moving it can be difficult. Shipping delays and refining limits can slow supply chains. Trade rules and geopolitical tensions can also interrupt deliveries. Imagine a factory needing silver immediately, but the supply chain cannot deliver it quickly enough. Production schedules might suddenly change. That delay could affect electronics or energy equipment manufacturing. If many companies face similar delays, pressure builds. The entire industrial system begins to feel strain. Some analysts believe recent silver movements reflect these pressures. Instead of pure shortage, the issue might involve distribution. In other words, the metal may not be disappearing. It may simply be moving into different supply networks. That difference is extremely important. Markets behave differently depending on who controls the supply. If silver becomes concentrated in certain networks, public markets may not reflect true demand. Prices may look disconnected from industrial needs. Banks and commodity traders watch these signals carefully. Unusual metal flows often reveal deeper structural changes. When analysts see sudden contract activity, they ask bigger questions. Sometimes those answers reveal geopolitical dynamics. For viewers here on Iron Ledger, this is exactly the type of hidden story worth following. Financial markets connect deeply with politics and industry. Prices on a trading screen rarely tell the full story. Behind them are policy decisions and global competition. A decision made in Beijing or Washington can affect markets worldwide. Commodity prices often react long before headlines appear. Silver sits at the intersection of technology and energy systems. That makes it a powerful indicator of economic shifts. Now, this does not necessarily mean any country intentionally crashed the market. Commodity markets are influenced by many different factors, but when geopolitics and industrial demand interact, the results can look dramatic. Prices may move before the public understands why. The real question now is what happens next. Global demand for silver continues rising through renewable energy growth. Advanced electronics manufacturing also requires increasing amounts of silver. These industries are expanding rapidly. At the same time, geopolitical competition for resources is intensifying. Countries want secure access to strategic metals. That combination may create volatile markets. Prices could swing sharply as supply chains adjust. For investors and manufacturers, this uncertainty matters. Understanding these hidden forces becomes extremely valuable. Because silver is no longer just about jewelry or coins. It represents technology, energy systems, and economic power. In many ways, it reflects the competition shaping the 21st century. Commodity markets sometimes reveal those shifts quietly. Before we wrap up, I'd love to hear your thoughts. Do you think geopolitics could seriously disrupt the silver supply chain? Or do you believe the market will balance itself as it has before? Share your perspective in the comments below. If you found this explanation useful, consider sharing the video. Someone interested in technology or global markets might appreciate it. These discussions become more valuable when more people join. Different perspectives help reveal the full picture. Thanks for watching Iron Ledger. And stay curious about the forces quietly shaping the global economy.